Hello and welcome. Thank you for joining me for my weekly chat with the College Prep Guru. Today we have here with me John Hupalo, founder and CEO of Invite Education, and he is actually back for a second round. Welcome, John.
Jordan, great to be back with you. Thanks.
Yeah, absolutely. So last time we talked about the basics of college affordability, but I know that there are specific questions and concerns around the loan process, and particularly in the media, they're kind of demonized as being bad, and we hear about the college loan crisis and things like that. So do you think that college loans are actually good for students or bad, or what's your opinion on that?
Yeah, Jordan, last time we talked about this, I said, sometimes the answer to those questions is always the third part, which is yes and no. And same thing here. So for some students, student loans can work out really well. And what I find from my experience, those are students who thought about it in advance. Not only did they think about how much they had to borrow, but how they could actually pay it back. And they started thinking about, well, what job might I have? And there's a rule of thumb out there that actually works pretty well. And that says if you take your total, so it's really important to say the total amount you think you're going to borrow for college, not just the first year, but all the years together, if that's equal to or greater than what you think your job salary is going to be for the first year, that's an affordable amount of debt. You should be able to handle that. So the media loves to pick up on these stories where this art history major unfortunately took $100,000 of debt and took a $30,000 a year job, and now they're going to be in debt. And I agree, that's not a great outcome for anyone. But that's also the kind of outcome that I think families have more control over than the media would tell, and sometimes what families think they might be able to do. At the end of the day, the student and the family makes the choice of what school they're going to go to. Last time we talked about fit, and his financial fit should be one of those really important criteria.
Yeah. So just to clarify, the rule of thumb then is that your salary coming out of college needs to be equal to or greater than the total amount of loans borrowed, right?
Exactly right.
Okay.
That's right.
What a great rule of thumb. I had never heard that before, but that's a great way to kind of keep it straight in your mind when you're looking at schools and talking about careers, which I think is sometimes an overlooked part of the process. They get stuck on, well, how much is college going to cost, but don't think about how much they'll actually be making when they get out.
Well, and the other part of that is sometimes, and it happened just the other day, so we said, well, nobody in high school knows what they're going to do. Well, they might not know exactly what they want to do, but they know, you know what, I'd rather be an artist than an engineer, right? So let me just find some average starting salaries for artists and engineers, and then I have a pretty good ballpark of how much debt I might be able to take on. That's right.
Yeah, they can definitely narrow it down a little bit, even if they haven't pinpointed the exact job. Yeah.
Absolutely. Yeah, no question.
Yeah, so let's talk more about loans. I know there are lots of different types of loans, and it can be really confusing, and we won't even get into the different acronyms when it comes to financial aid, because that, again, can be very confusing. So let's just keep it to loans, and why don't you compare and contrast some of the options that are available out there?
Oh, great. You're right. There's an alphabet soup of those acronyms, and actually we started something called My College Corner on YouTube to try to demystify that whole process. And we put out little short videos about all of that to actually talk about some of the acronyms in the process. And one of the videos that we did is just on loans. And there are really two kinds of loans for two different kinds of borrowers. So the two flavors, if you will, at the top of the line. Let's talk about students first. Students can borrow under the federal direct student loan program. And the great thing about that program, actually there's a lot of great things about this program, but one of them is that it's capped, so freshmen can only borrow $5,500, and by the time they get to be seniors, they can borrow $7,500. So I like that because it really contains the amount of debt that a student can take. And the other thing is that the government says, I understand that, and this is actually a time I think they're right. They get this right. Well, they understand that students don't have jobs, they don't know exactly what's going to happen, so they make the repayment on the back end as easy as possible, to the point where they'll say, we'll only take a certain percent of your disposable income, 10 or 15%. If you have a low-paying job and a high amount of debt, we're going to try to work with you. And if it really doesn't work out at the end of the day, we'll forgive those loans down the line. So that's, the kind of treatment, I say, that a regular bank that has shareholders in it, they can't offer that kind of opportunity to a student, but the government, I think, rightfully does. So if you're a student, direct loan, I think, is really by far the best. And I had the opportunity to interview Christine Roberts, who runs the Citizens Bank student loan business. And I asked her that question. I said, do you think that students should take a direct loan? And she said, absolutely. That loan is really the best for students. Now, the second question is, what about when we need more? Or the parent says, I want to be the one to borrow. And sometimes that's where it starts to get really tricky. So again, for students, the federal loan is the best. For parents, there is a loan option called a PLUS loan, one of those crazy acronyms, Parent Loan for Undergraduate Students. That's why it's there. But it shows up on the school's financial aid award letter as a gap filler. So they say, oh, we have all these costs, and at the end of the day, you're still $20,000 short. You can have this PLUS loan. If your listeners are thinking about a PLUS loan, I think they should be very, very careful. The issue that I have with the federal PLUS loan is that it's not capped. There's no credit check, so anybody with any income basically can get it. There's a very little, I won't go into the details, but there's a very minor, most people think kind of silly credit test that goes there. There are fees involved with that loan, over 4%, which is actually very high. And unlike every other lender in the world, in the country, I'll say, there's no APR calculation required. So if I go and get a mortgage or a car loan, it tells, well, here's your actual percentage, put the fee, put the interest rate in. So I'm not real crazy about the PLUS loan for most families. The banks, though, they do have a program, and Citizens and Discover and Sallie Mae, and I'm going to get in trouble for naming some of these because I've left out about 10 or 11 of them, but there are many, many of those programs out there that are really good for parents. And one of the great things that they'll do is say, you know what, here's your income, here's how much we can lend you. And they're actually putting a little bit of brake on excessive borrowing. And what Christine Roberts told me in her interview was that their default rates are very low on their loan portfolio for students and for parents, and in fact lower than what they are for car loans and mortgages for that very reason. So I think the parent loan is really good. One other point that's absolutely critical: if a family's looking at a parent loan, make sure that the loan has what's known, and it's very technical, but stand by, co-signer release. The co-signer release is just really critical. So what that allows, when my daughter went to school, we took one of these private loans. She didn't have a good credit rating, no credit rating at the time. I had a pretty good one, so I signed. And so we're co-borrowers. I co-signed that loan for her. If she doesn't make the payment, they come to me. She's making the payments, I have to say, so I'm real happy about that. But the good news is, if she keeps making that payment, I'm going to be released as the co-signer. So if she makes 2 or 3 years worth of on-time payments, then they're not going to need my credit anymore. So I'm released from that obligation. And, one of the issues you said at the beginning, the media loves to glom onto these, and the highest default rate increases in the population of 60 and over, right? So if you're 60 and over, that's the fastest growing student loan defaults. Why? Because they have these loans that they couldn't get out of. And so this co-signer release gives me as a parent a chance to help my student and then be released when they do the right thing and they pay on time.
Yeah, wow, that's a great point. I wasn't aware of that. And does that then, I'm assuming, helping them building their credit as well?
That's exactly
through the
right.
Process.
Right.
Yeah.
So you get the best of both worlds. They need help at the time. It's in their name. They're making the payments. And then as a parent, I'm released once they're made a few payments on time. So it's really a terrific opportunity for everybody.
Sounds like the ideal situation if you're going to have to borrow. That's great.
I think it is.
Yeah, so what have you found to be what parents and students really struggle with this student loan process?
Well, there are a couple things, and I completely understand it. I spent most of my career in the student loan world, so I get it. It's what you said at the beginning. It's really complicated, and it is, but there are resources out there. And so I think it's really important, and if you're starting in 12th grade, start now. But if you have a 9th grader, start learning about this now when there's no pressure to have to make a decision, right? So when you come that time, it's okay, a direct loan, a parent loan, or whatever it is, I understand at least what the terminology is, and I understand how it comes to play. But if I'm in the 12th grade right now and I have to think about how I'm going to pay for college next year, or right now the student starting college, just again, know what the facts are. For a student, make sure that they're looking at the federal program first. If you need more or the parent wants to be involved, you want to be a co-signer, just get the information and ask questions. The one thing that I was most impressed with in my interview with Christine was that the banks completely get it. They do not want their customers to default. The students don't want to be defaulters. And they are now providing a lot of information, very plain English, generic information just about what a loan is, what every part of the process is. So unlike 10 years ago where it was a jumble and I think it was sometimes purposely confusing, it's not like that anymore. So go get the information. That's the best advice I can give.
Yeah, definitely getting educated, seeking it out early is very important. Great.
Absolutely.
Well, this was a fantastic overview of loans and what parents and students need to be thinking about, hopefully early, but I know we probably have some seniors on here watching this that are scrambling to get things done. So to wrap things up, do you have any last bits of advice or tips that you could give college-bound families?
Yeah, absolutely. And for whether you're scrambling or you have time, I think the end of the day is just really important to what we say. Get the information, share it with folks. And by the way, I don't think necessarily your friends are the best folks to share this with because they have the same concerns and anxiety. Find professionals, the guidance counselor, the financial aid administrator at the college, a local bank, a credit union. There are lots and lots of resources out there. So go get the information and think it through, ask a lot of questions, and find out what that right financial fit is for your family. And at the end of the day, you're going to have a great experience.
Yeah, and seeking out that help because there are so many people out there who are great resources, lots of information, but then are more than willing to help families out through this process. So I think that's
Absolutely.
a great place to end. So thank you again, John. We appreciate you being here. It's great chatting with you again, of course.
I enjoyed it, Jordan. Thanks again. Have a great day.
You too.